From the floor of the CME Group, this is Danny Riley on today's Cash Close. And the name of this video is going to be the week of the Pit Bulls Thursday, Friday low, the week before the Quad Witch. The high of the S&P came in at 1999.30 after Apple announced. The low came in at 1983.5 recently, and last were 1986.60. We're down 14 handles. Total volume, we've got 1.8 million minis traded, and we've got 12,000 big S&Ps traded in the pit. And I want to remind everybody, 9,000 of that came from the S&P spread, the Sept spread. That's right, we're into the roll now, and Thursday's when they flip-flop. MOC was flat. The MIM started out to the buy side as the futures started coming down. I said soon to be a flip, and gradually it went right down to very little to buy, really what they consider flat. Tomorrow they've got the MBA Purchase Apps, we've got the wholesale trade number, we've got the EIA Petroleum status report, and we've got a 10-year note auction. Now look, I want to say something. I think everybody knows that this party could end at any time. But I believe what's going on is we're just doing a wish-wash here. A little bit of a flunk-a-dunk here before we go into the Pit Bulls Thursday, Friday low. But I will say, taking out the support level at 88 to 92, the S&P went crashing through there late in the day. In a matter of minutes, the S&P dumped like 4 or 5 handles. And you know what? Right as it did make that low, I came out on Twitter and I talked about a 3,000 lot buying balance on the market delta, and the S&Ps went back up to 87, but they were kind of meandering a little lower once I walked out. But look, I think what happened today is the Algos grabbed onto those early European headlines. You know, the stuff about Spain being down 16%, and possible defaults and all that stuff, and Europe in trouble. That stuff, as soon as it hit the tape, you know, the floor said that the S&P started to sell off after the Apple stuff came out. But my feeling is that really this stuff was set in motion before the open. The futures opened up a little lower. They started to trade down. They had a hard time gaining any real footing. And then the premium levels between the S&P and the S&P cash, they became stuck almost at sell program levels. Even when they short covered back up to, after they made that early low and they traded back up to 97 even, there was no real buy programs associated with that. It was all short covering. And as soon as that short covering evaporated, the S&P fell right into a sell program, traded back down the lows, and then late in the day got hit by more sell program. Now, you know what? Again, I'm gonna say it like it is. I don't know when the bull market's gonna end, but my feeling is that it's not over. That this is just another pullback in front of another new high that'll come at some point, I think, in the next week or so. But that said, I did think that we would make some new highs this week, and I've got to say, I think that's going to be kind of tough to do. That said, the S&P is going out on a weak note. Mr. Bull's got to be quiet when it's like that for a couple days, and I'll see you guys tomorrow on the opening print.